Hello guys, it's Max here from Daily Market Movements and welcome to another Market Outlook video where today we're going to be discussing the trading week from the 20th all the way through to the 23rd of June. In terms of economic data this week, it's kind of mild. We have Jerome Powell who's going to be testifying in front of Congress on Wednesday and Thursday. We also have the initial jobless claims on Thursday, and then on Friday we have the services PMI data. So not too much going on, but of course, last week was very busy. We had the CPI, we had the PPI, we had, of course, the interest rate decision, and then on Thursday we had the core retail sales. So lots of economic data last week, which I think investors are still trying to digest. But more importantly, if we look at the S&P 500, the Nasdaq, and the Dow Jones 30, the markets are pretty much sitting at the highest point that they've been so far this trading year. We have the Nasdaq 100, which is above 15,000. We have the S&P 500, which of course broke above 4,350. The Dow Jones 30 looks to be hitting its swing highs of its trading year any day now, with that break above the wedge which I was talking about during last week's Market Outlook video. Now, if we just quickly look at the S&P 500, the S&P 500, we broke above that key area of resistance, which was 4,200 a few weeks back, and since there we haven't looked back. We continue to trade higher. We've gone up towards that 4,350 area, but if we look closely here on the RSI is incredibly overbought at this moment with a reading of 75. So I do believe going into this new trading week that we are likely to see some sort of digestion, maybe a minor pullback, so that we can consolidate these large gains that have occurred as of recent. I see 4,200 being the floor here in this market, and I think that there's definitely the potential that we could trade up towards 4,500 in the coming months. Moving over to the Nasdaq 100, this market has been on fire. We already have double-digit returns in terms of percentage points this year, but again, just like the S&P 500 with the RSI, which is over 76, which is telling us that we are incredibly overbought here. So I think that going into this week, which is of course a shortened trading week as Monday was national holiday, I do believe that we are going to see some sort of digestion. We may get a minor pullback to try and attempt to call off the RSI, but I definitely do believe that this market is very strong at this moment in time. And for those investors who've missed the run so far, as soon as this thing pulls back, investors are going to try and hop in and try and buy the dip because they want to be part of this market. And then moving over to the Dow Jones 30, what we've seen in the past 2 weeks is a nice broadening out. We've seen participation from the financial names, the energy names, the cyclical stocks. And this is very important. This is actually something that I did forecast in my previous 2 Market Outlook videos, that I would like to see a broadening out in the rally. And that's exactly what has occurred. So this is very encouraging for the overall market as a whole. We really do need to start to see parts of the Russell 2000 to take part in this rally. And that's something that we are starting to see. So I really want to see a continuation of this broadening out. Let's say if the Nasdaq 100 takes a breather for the next couple of weeks, can the Dow Jones 30, can the more cyclical names, the financial stocks, the energy stocks start to broaden out and start to rally and support the tech names as those big high flyers, the likes of Nvidia, Meta, Apple, Microsoft, when they take a breather, can we see the other names take their place and hold this market up? And then moving over to crude oil is trading back above $70 a barrel, which is encouraging, but I think these rallies should be faded. I think eventually we are going to see a breakdown towards $65. We still have that inverted yield curve, which is one of the most effective technical indicators that a recession may be on the verge of occurring. So with that being the case, I still believe that crude oil is going to continue to see some downwards pressure here. And then moving over to the gold markets, gold finds itself trading up at 1958. That's where we closed last week's trading week. We had a very volatile week. We actually created a new low, which is slightly worrying for gold traders because we did break down to around 1925. But the good news is that, the bulls did step back in and we sent this market all the way back up to 1960. So I think the bulls here will try and attempt to break above, let's say 1970. That's where the 50-day EMA sits on the daily chart. And I think if we can break it back above 2000, that's going to be very encouraging for gold long term. Just feel like the hawkish comments as of recent have not helped gold's case to move higher. But I think that, once we start to hear that we are going to get some rate cuts, whether that be the end of this year or the beginning of next year, that's when gold will have a real opportunity to start surging higher. Also, I just wanted to finish today's video by saying a massive congratulations to everyone on my free signal and market research group. We've closed 8 positive winning trades in a row now. Last week alone, we yielded 16.65%. So a massive well done to everyone on my signal team. If you guys at home would like to join my group for completely free of charge, all you have to do is scan this QR code on your screen. It takes 10 seconds to sign up. There's no catches. You can literally just join for free of charge and get involved with my next trading signal. So thank you very much. That's all for me today.